Good morning, ladies and gentlemen. You are in the Pill Method Club. If you're new to the club, go ahead and look at that green mansion above. Will you please click that and join the club? We give out a ton of great information here about finances, about building wealth, about saving money on interest, about learning how lending actually works. We're going to be giving out some information today, and we're going to be talking about how, in the information that's being given out now, there's a lot of information given out by financial gurus on TV and online that will actually keep you in debt longer and cost you more money in interest by following what's called best practices. Best practices. Oh my gosh, we're following best practices that's actually going to keep us in debt longer. Because here's one thing you want to think about, folks, and then I'm going to get into introductions here. All right. Here's one thing you want to think about when you listen to this information. When you're getting financial advice, it sounds good because you've heard it over and over and over again, and no one actually refutes it. So you just believe it to be true. But when you stop and think about it and ask yourself this question, has anybody ever shown you the numbers on why this particular advice is the best advice to take? It just seems like it would be the best way to go. It seems like a credit card interest rate of 17% or 27% is better than a mortgage rate of 4 or 5 or 6%. It would seem as though the credit card interest rate is actually hurting you more than the interest rate on a mortgage. I'm here to tell you that's not true. The reason why we're in long-term debt is because of the amount of interest that we pay. The more interest you pay, the longer you're in debt. Okay, so let's just think of this: if all of your loans were 0% interest, this show would not exist. If banks did not charge interest, this show would not exist, because what we're talking about is how to borrow money at a discount and why we need to borrow money at a discount. Because if you have a $200,000 mortgage, a $300,000, a $500,000 mortgage, and you make good money, it shouldn't take 30 years to pay off a $200,000 house when it only takes 7 years to pay off a $200,000 car. Think about it. 30 years to pay off a $200,000 house, 7 years to pay off a $200,000 car. You can't get a 30-year loan on a car, but you can get a 30-year loan on a house. There's a reason for it. And we're going to dive down deep here today to get into this thing. Oh my goodness. Oh, look who's here. If you don't listen, oh my goodness. Let's see if we can get him to come up to speak before we mention him. Mr. Denzel, how are you doing, sir? Listen, we love your stuff. And he's grown quite a community on his YouTube channel. And he's here today. We're talking about why credit card rates are better than mortgage rates, and we're going to show you the numbers. All right, but first of all, ladies first, Miss Dawn, would you go ahead and introduce yourself before you get to your meeting? She may be in the meeting already. All right, Mr. Denzel Rodriguez, how are you doing, sir?
Hey, good morning, sir. Just popped in, saw your room, and figure I'd listen in. How's everything going with you?
Everything is going extremely well. Would you please introduce yourself and tell the folks what it is that you do and how they can find you?
Yeah, so I'm a financial consultant, coach primarily. I teach the velocity banking concept infinite banking, and I also teach, faith and finances, but primarily doing what you do, but without the software. Um, Although it's very effective. We've had conversations before on that, and so I'm all in it in regards to accelerating your mortgage. Um, what this gentleman here is discussing, I've already heard your message quite a few times already. So if anyone is new in here and you're like, yeah, yeah, right, 17% is better than 3, like, prove that. Yeah, he's got the software to prove it. On my YouTube channel, I prove it on a whiteboard. I use real case studies, real scenarios. I'm at a point now where I have a relationship with a bank that actually supports this concept. So if you're looking for like credibility, if you're like looking to do your due diligence, I would say that my YouTube channel is a good resource. We do look at the numbers. We evaluate simple interest versus compound interest, or I'm sorry, simple interest versus amortized interest. The whole idea is to leverage and borrow at a discount, like you just said. In many cases, the ability to borrow at 0%, which is simply offsetting the interest that you were going to pay already. So imagine being able to borrow at an interest rate that the bank gives you, but you don't actually pay that rate. And that's what simple revolving interest gives you the ability to do, where the bank says, here's your rate. It's 7%, it's 5%, it's 9%, it's 12%. But imagine not actually paying that rate, where you can cut that down to 1 to 2%, 3%, in many cases, 0, with the help of these particular banking products at the bank. So I'm not going to steal the show from you, sir. This is your community, but you can find me on YouTube. You type in Denzel Rodriguez, not Washington, and you'll find me. And you can do your homework, do your due diligence. It's important. We're talking about saving you, what, 2/3 of the time on average to pay off any debt. So if you had a timeline of, say, 13 years, making extra payments, we could do it in 7 or less, right? That's an incredible amount of savings in interest, cash flow, giving you the ability to invest faster and more in a shorter period of time. So, passing the mic back to you, sir.
Thank you very much. You're not Mr. Washington. I'm just messing. So he says that all the time. It's Denzel Rodriguez, not Denzel Washington. It gets your attention. I appreciate that. So, man, listen. Thank you very much for coming to the stage. And you're exactly right. You can, once you look at the numbers, you can leverage. You can do an arbitrage play by using someone else's money to do something for you. So let me give you, we're going to just give a quick example here of how you can use somebody else's money to make a difference. Now, I'm getting ready to show you something. I am not explaining how the P.I.L.L method works. I am not explaining how the P.I.L.L method works. What I am showing is how interest is calculated and what it could do for you if you know how to use your money and money you could leverage. Okay. So right now, let's see here. Do we have anybody who's raising their hands? All right. And let me see here. And I'm sorry if you don't have a um, a profile that's filled out all the way with being linked to social media. I'm sorry, we just can't bring you up. All right. It's not your fault. It's the fault of others who have abused the privilege of coming to a stage and disrupting. So fill out your bio completely, link it to social media so my team can do some vetting before we bring you up. All right. So anyway, thank you everyone for being here this morning. And if you want to see these examples on the screen, go to ice10k.com, ice10kvideos.com rather, ice10kvideos.com. When you go to ice10kvideos.com, it will take you straight to my YouTube channel. And you can click on the live stream and you can actually see the numbers we're going to be putting up on the screen. And we're using an online amortization calculator that anybody can find. Again, this is not part of my program. We just use this for examples. And if you want to see this on your own, you can go to brettwhistle.net, BRET, first name, last name Whistle, WHISSEL. That's WHIS as in Sam, S as in Sam, EL. And you can find his amortization calculator. But it has become so popular that other companies are trying to co-opt it. So be sure you're not clicking on an ad that takes you to someone else's amortization calculator. Make sure what you're clicking on is Brett Whistle's. And the reason why we use Brett Whistle is because he gives us two categories that most amortizations calculators do not give you. He gives you cumulative principal and cumulative interest, meaning anywhere along the line of your amortization schedule, you can see how much principal you've paid down and how much interest it costs you. And what we're going to be talking about today mostly is interest cost versus interest rate. Interest rate is a liar. Interest cost is the truth. And you need to understand interest cost so that you could do something about your interest rate. And then what we're talking about, folks, is what can we do? What can we do to help ourselves in understanding this? So let's go. Let me put something right quick on the screen. And let me share the screen here. And we're going to share our amortization schedule. And it's I've got a I've got a $15,000 credit card at 20%. Now, what you need to realize is when you're figuring out credit card interest, you need to figure at 240 months because generally that's what the banks use. That is the term that they use. That is the amortization that they use is 240 months to figure out how much interest you're going to pay. And then on top of that, when they do an amortization schedule, then each bank determines what percentage of the money you owe they're going to add to that payment. Okay. So mortgages use a straight amortization. Credit cards use a straight amortization plus a percentage of what you owe added to the minimum payments. That's how they figure that out, okay? And each bank does it differently. So let's take a look at, first of all, let's take a look at a mortgage of $200,000. And we're going to look at it at 6%. And we're going to see what's going on here and why we need to focus on how all of this works. So a $200,000 mortgage at 6% interest, here's how much interest the bank wants. If we take a look at it, it's $231,676. Folks, it's $231,000, 6% of $200,000. That's the first thing you have to take a look at in understanding interest rate versus interest cost. If you're not careful, if you follow what the national media is saying, if you follow what the gurus are saying, if you follow what the so-called experts are saying, or what we have heard over the years and never looked at the numbers, you can't understand what it means to understand interest cost and interest rate. So let's just say, I'm going to borrow money at 10% interest. I'm going to borrow money at 10% interest, 10%. And I'm going to understand what it means to prepay on a loan. All right. I'm looking at this number. Okay. Let's just say I'm going to borrow $2,456 at 10%. Now, when you're borrowing at 10% annually, you've got to divide that 10% by 12, and that gives you the monthly interest cost. Okay. So it's actually less than 1% per month, but it's 10% for the year. I'm going to borrow about $2,400. What's 10% of $2,400, folks? Does anybody know? 10% of $400. Can somebody put it in the chat? Okay. What is 10% of $2,400? Somebody put it in the chat for me, either online or on Clubhouse. Come on, participate. I would love it if somebody would come to the stage and tell me. Okay. But while we're waiting for somebody, because they're typing it now, we're typing it now, and it's $240. So if I borrow money from the bank, all right, there it is. Go ahead, Chiquita. Thank you so much. So if somebody says, if I'm going to lend you money for $240, I'm going to charge you $240. Okay, and we'll say, oh my gosh, I got to pay $240 for that. Let me show you what would happen. Do you see here on the screen, if you're looking at this, on this mortgage that I've got on here at 6%, if you look at the cumulative principal and the cumulative interest, all right, for 1 year, look at this. How much would the bank want you to pay this loan down by? $2,456 and a penny in 1 year. And I need you to see how much interest you would pay. $11,933.19. Does anybody here want to pay the bank $11,933.19 in interest just to pay their loan down by $2,456 and a penny? I need to see the answers. I need somebody to come. So somebody says, I can't see the screen. Okay, folks, go to ice10kvideos.com. ice10kvideos.com if you want to see the screen. And can somebody else put that in the chat for me every now and then? ice10kvideos.com. You want to go to a separate device like a iPad or a tablet or your computer, and then type it in. That way you can participate on Clubhouse and watch this. But if you only have one device, you can listen and watch on YouTube, or you can go to Facebook and search for the Pill Method, or Twitter, or even LinkedIn. All right. But if you want to go straight to our YouTube channel, I'd appreciate it. And please click on subscribe, comment, and share these videos. All right. So folks, thank you. Thank you, Credit Goddess, for coming in. I didn't even see you there. Let me bring you up here. All right. There she is. Credit Goddess, how are you doing this morning?
I'm great, Don. How are you?
I am doing extremely well. And guess what? I was listening to a replay of you in the automotive room yesterday. Was it a lunch and learn?
Yes.
Okay. Thank you so very much for your support. I heard every word you said.
Oh.
I heard.
Yeah, we rep you in the other group. In the other room.
I appreciate that so very, very much. And so, Credit Goddess, I'm gonna go through this quick example. Then we want to hear from you. Who are you and what do you do? But I'm just pointing out that if we prepay, if we have this mortgage and we pay it down like the bank wants us to, we're gonna pay this loan down by $2,456 and a penny. And we're going to pay $11,000 in interest. And folks, here's how it breaks down. All right. If you want to see this, go to ice10kvideos.com. All right. Every month you make a payment. I need you to take a look at this. Every month you make a payment. Look, this much goes to pay down the loan. The principal part pays down the loan. Okay. If you were to break down what mortgage really is, mortgage has to do with the money you borrowed and you are paying back. Okay. If you take a look at the interest, you did not borrow that money and you're not required to pay back all of the interest that they're looking for. And I need you to write this down, even write it in the chat. Interest payments you skip don't matter. Interest payments you skip don't matter. I don't care how much they're looking for. It is just like Denzel said, is how much interest you end up paying. That is the key to this whole thing. And you are not required to pay all the interest the bank is looking for. Oh, am I getting myself in trouble here? I don't know. Let's just see. Okay. So if I just look at this and every month I'm making a payment, I need you to see this. Every month you're making a payment. See? $200, $200, $200. Just a little bit more goes to principal each month and a little bit less goes to interest each month. But at the end of 1 year, if you add up all the principal payments for 1 year, it comes to $2,456 and a penny. But if you pay each month, look at this. You're paying $1,000 to start with, and the rest are well over $900, practically $1,000 each month in interest. Folks, how fair is it? How fair is it to pay your loan down by $200 and pay the bank nearly $1,000 each month for the privilege? And they get to call it 6% interest. How about that? So by the end of 1 year, look what happens. You paid the loan down by $2,456. You have a payment you can afford, and you've paid them nearly $12,000 in interest to do that. How fair is that? I need some more shares. Could somebody share out in the hallway just a few more, just a little bit more? Can we get up to 10 shares? Right now, we have 25 people in here. If I can get up to 10 shares, I think we can get up to 40 or 50 people in here that need to see what we're talking about, and they don't need to get it on the replay. Although the replays are on, and they'll be able to see it a little bit later. But let's get some people in so that they can see it firsthand. We're up to 6. Let's see if we can get to 10. Now, watch this. Now, I'm going to show you what happens if we just do 1 month. 1 month, okay? If we make our mortgage payment here, all right, 1 month. Let's say we make the mortgage payment this month. It's made on time. We don't owe another payment till next month, all right? Based on timing and based on math, the bank will then tell us how much interest we owe next month. Because we owe less money, we pay less interest. We're paying interest on the unpaid balance each and every month. You're paying interest. It's 1/12 of the interest rate. 1/12 of the interest rate you're paying on the unpaid balance every single month. And that's why it is so doggone expensive. And so month two, next month, today, this month is August. September, if we were paying this loan, September would be $200.10 going to principal and $9.99 going to interest. Here's the secret to this whole thing. Everybody here knows you can prepay a loan. Everybody here knows you can give the bank extra. What we don't know is how much interest you can save by doing it. If all of your loans were 0% interest, folks, if all your loans were 0% interest, you would not need us today. You wouldn't need us. Okay. I wouldn't, there would be no need for my business. There's nothing to solve here. What we're solving is a math problem most people don't even know that they have. It is a problem that you don't know you have. But here's the thing. If I give the bank this $200, if I wait till February and give them this $200, I also have to give them this $999 if I wait till the next month. Okay. If I wait till September. All right. If I make this mortgage payment this month and I look at the principal payment here, if I give them the $200.10 also in this month, I'm paid down to the principal balance on line 2 already. I'm paid down to the principal balance on line 2 already. And since I have to make a payment every single month, then my next mortgage payment is based on the $199,600.80. And that gives me the numbers on line 3, where I'm paying $201.10 and $998. What just happened? By prepaying the $200.10, I just turned a 360 month amortization, 360 month worth of payments into 359 months just by paying $200.10 early. I get rid of line 2 on my amortization schedule for only $200 instead of the nearly $1,200 the bank was looking for. And the $999 interest on line 2, I don't have to pay. All right. And anytime you want to jump in here, Denzel, this is the good part. This is called the arbitrage part, where we're talking about that Velocity Banking uses in using what we call debt weapons. Okay. So listen, if you borrow, all right, this 245601 on line 12, did you realize you do not have to pay this 245601 in 12 monthly installments? You don't have to. You can give it to the bank all at once on line 1. If you did, you would subtract that from what you owe. You'd be paid down to line 12 in just 1 month, right? And your next mortgage payment for next month will actually be on line 13 of this amortization schedule. Wow. But Don, I don't have 245601 to put on the debt. Now, this is not the P.I.L.L method. I'm just showing you the numbers. And when we contrast amortized interest eliminated using the interest cost on another loan source, even at a higher interest rate. Okay, so what if I were to borrow $2,456 and a penny, okay, at 10% interest, and I borrow that money and I put it on this 6% loan? Does that make sense to anybody? If I borrow money at 10% and apply that money to a 6% loan, does that make sense to anybody? I'm borrowing 10% money and applying it to a 6% mortgage. Oh my goodness. Now we're going to get into why credit card interest rates are better than mortgage rates. It's going to make sense here in a minute. So if I do that, folks, let's just say if I borrow the $2,456 and a penny and I can pay it back in about a year, and the bank is looking for about $240 in interest. $240 in interest if I pay it back in a year. That's how much interest I'm going to pay them for borrowing their money. $245.60. $245 in interest on that money. But look what happens. If I take that money that I borrowed at 10% and I put it on this mortgage, do you realize I eliminate all the interest costs between line 2 and line 12? I eliminate all the interest costs between line 2 and line 12. And by looking at this amortization schedule, I can add it up easily. It comes to $10,944.42. I say I can get to the same place on the amortization schedule, not for $11,933 that the bank wanted to charge me, but for only $1,000. I can get there for $1,000 interest instead of nearly $12,000 interest. Does this make sense to everybody that we're talking about? Does this make sense? Okay. So while we're talking about that, Credit Goddess, could you please, we're going to take a quick break here, introduce yourself and tell us what you do and how people can find you.
Absolutely. Hey, everyone. Happy Wednesday or happy hump day. My name is Rosa Laura Lewis. I'm also known as Credit Goddess, all things credit, and the official credit expert for the Pill Method crew here. I am a credit score improvement strategist. So not only do I help you repair your credit, but I also help you rebuild through education. I'm also a business credit consultant. So if any entrepreneurs out there, whether you're a startup or you've been in business for a couple of years, I help you establish business credit so that way you can separate your personal credit and grow and scale. Also, an educator at Be Free University. If any of you guys are interested in my services, tap in by sending your name and email address to the number in my bio, tap my picture, and you can send your number to 888-557-5778. Again, that's 888-557-5778. And yes, I am the owner of Budget Credit 360. So definitely tap in with me. Let's get started.
All right, thank you very much for that. So listen, folks. So let's do a recap. All right, here's the recap. I borrow money from the bank at 10%. They're going to charge me about $240. Okay, it's going to be less than that, but we'll just say we'll cap it at 240. They're going to charge me about $245, but I'm going to take their money and apply it to this loan and save myself $10,944.42. So is there anyone online or in the room today that would pay $244 to save $10,944.42? Is there anyone out here that would take that trade? Come on, Denzel. I see you flashing your mic. I know you got something to say about this.
Come on now, that gets me excited, and just to sweeten it a little bit more, so people really get this, like the amount of available capital is out there for you. Take that same example, that credit card at that 10% rate. Imagine if you could borrow from that credit card at 0% for about 12 months, 18 months, 21 months, 24 months. And on top of that, have no balance transfer fee to access the credit into cash, which you would then deposit into the mortgage, the debt that you're trying to eliminate, not pay down, but eliminate, right? And literally cancel interest. So instead of making your grandiose extra payments where you're getting killed on the interest, why not use OPM? And then you take your money that you were going to pay anyways and pay off the credit card. And instead of paying the 240 in interest or whatever the interest rate was, you pay nada, zilch, nothing, zero, right? That stuff gets me super excited. So that's just sweetening it a little bit more for you, right? And just getting people like, wait a minute, what did he just say? Does that exist? Yes, it does. So that's why, whether it's 10, whether it's 15, 29, 21%, the rate doesn't concern guys like Don and myself, and even Credit Goddess. It's how we use the tool, right? To maximize the cash flow efficiency, right? Cash flow together is stronger than when separated, right? And I'll leave it at that. Turn it back to you.
All right, folks, listen, what we're going to do is take a quick break here. We're going to take a quick break, and I need you, there's somebody else out here that is using this methodology to save money on interest and to eliminate debt and interest at a phenomenal rate. And I want to tell you that people who have resources do not pay cash for cars or houses. What they do is they borrow money from the bank at a reduced interest cost, and then they take their money and invest it. So let me give you an example of somebody who is famous, who has that I had an opportunity to have come speak at one of my conferences in May, came in and spoke at our conference in May in Nashville. And we've taken his words and added it to our brand new television commercial that just started playing this month. I need you to listen to what Eric Thomas has to say. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L Method. I invite you to watch and listen.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today. Did you hear that, folks? Did you hear that? No stress, no mortgage, no mortgage, no stress. And so we listen, that's kind of an emotional type thing. But what's really going on here, folks, what's really going on, and this is what we're going to be talking about on Sunday, is when you get a deal, when you get a discount, when you can save money, don't spend the difference. Invest the difference. Oh, we're going to be talking about that. Okay. Because if I can buy, listen, if the bank wants from me $300,000 in interest and I end up paying them $100,000 or $90,000, that is a significant, cut in interest cost. So think about it. I get so excited that sometimes my words fail me, but think about this. I'm acquiring an asset, and this particular asset that we're looking at, I'm going to go back up to this. We're going to put this back up on the screen here, and we're looking at this particular asset. The bank wants $231,000 in interest for this asset. I'm buying it for $200,000. I'm in a $200,000 neighborhood. Okay, I'm in a $200,000 neighborhood, but the bank wants me to pay them $231,000 in interest over the next 30 years, which means it's a $431,000 purchase. Wow, $431,000 to acquire that asset. All right. Eventually, it's going to make money for my family because we want to buy and hold. We want to build assets. We don't just want to buy them and sell them. We would just want to acquire and try to acquire more. But here's what's going on. If I have to pay $431,000 for this, it's going to take longer for me to actually turn that into an asset where it actually makes money, where I actually move into the positive on that when I look at how much I paid for it, as opposed to how much I'm making on the deal. But if I can acquire the same asset and pay $200,000 less, now that is a significant discount. Here's the thing. If I signed a note that says I'm going to pay you $231,000 for this, but I end up paying you a lot less, $100,000 to $150,000 less. Now I have a choice to make. What do I do with that $150,000? Do I go out and spend it and have a good time, or do I invest it and then I can spend the interest on that money? Oh my goodness, Denzel, do you have any place where you can actually take monies that you're saving and invest that money and turn it into wealth for families? Do you guys happen? Do you talk about that at all?
Oh, yes. This is where it gets even more exciting, because then the person asks themselves, wait a minute, Denzel, inflation's at 9.1%. Taxes are going up. Cost of living's going up. Everything's going up. What if at the same time, say simultaneously, we're wiping out debt while also strategizing on how we could create cash flow vehicles, right? And you've got two main options. You can create cash flow vehicles in commercial jurisdiction, right, where you're subject to taxation, or you can operate like the ultra wealthy, and they operate outside of commercial jurisdiction, which is the non-taxable environment. And for those of you who are faith folks in the room, this is going to be really exciting for you, because there's a jurisdiction that exists called the ecclesiastical jurisdiction, or in other words, God's jurisdiction, where it's literally a non-taxable environment where you can create cash flow vehicles. And this is exactly what the ultra wealthy do, where they build their empires, their foundations, and their you-know-whats, their family offices and their trusts and their you-know-whats, right? So you learn the basic fundamental strategies of paying off debt, leveraging debt, right? Creating cash flow, interest savings in your own household, in your own economy. And then you start to think outside the box. You say, well, an example that I encourage a lot of my followers and clients is to start a business, right? You can invest in the crypto, great. You can invest in the stock market, great. Not against any of that. But I personally take the cash flow, the income that I generate, I use it to become debt free really fast through the methods that Don is sharing, and then I leverage the credit, the capital, and cash flow, all three that I have available, put it into my business, which generates 50 plus, 100 plus % returns based off my skills, gifts, and talents given by God to fulfill my purpose, my walk in this world for the time being, and generate I'm talking immense amount of cash flow, which I then put those into those asset vehicles, whether it's real estate, another business, another opportunity, the crypto, the gold and silver, the different asset retirement account, you name it, whatever it is in the marketplace. I'm looking to leverage it all, right? Because I'm operating in a dominion mandate, in a kingdom mandate, where I own nothing, control it all, right? In full authority and confidence, according to my skills, gifts, and talents. Passing it back to you, sir.
Thank you for that. Listen, folks, there are so many vehicles out there. And when you talk about how can I make money tax free, there are vehicles out there. One of them, how you can make a significant return on your money with no risk. All right. Are you ready? Da, 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 da.
Uh-oh.
How about permanent life insurance? What? Don, are you talking about life insurance? Come on. Listen, that's not life insurance.
I didn't want to do it to him, Don.
Listen, that's death insurance. Oh no, my friends. Oh no, that is, listen, something of let's talk about the ultra wealthy and some of the things that they do, because this is what we do for our clients. Okay. So here's the thing that you need to focus on. And you never want to go into this thing with blinders. This is why it's so important that people when they're listening to our videos, we have over 120 shows put up right now on YouTube. But you get just enough information, even from my 120 shows, to get you in trouble. You need some guidance. You need a little bit more information. And one of those things is to get my book. All right. One of the things you need is to get my book. And let's put the book on the screen. And to get the book, it is the only book on Amazon that talks about how to read and understand an amortization schedule and how to defeat it. How to read and understand an amortization schedule and how to defeat it. It gives you the basics of what to do and where we're going with this. And we're going to get what's and optimize your interest savings using technology. So we actually use technology that's specifically built to save you money. How can you go there? Go to Amazon and get that book today and start learning more about how these things actually work. Now, there is a point at which, when you're paying down the debt, folks, there's a point at which more becomes too much. You can violate the law of diminished return in anything. What? You mean you can actually put too much money on a debt and end up hurting yourself? How in the world can that be? Let me give you a quick example. I got a client right here in Huntsville, Alabama. And what he did was he's making more money now than he was making before. He's an engineer here. All right. And he's making so much money now, 5-6 years in, that by putting that information into our opportunity cost calculator, it now says he's going to pay off the $260,000 that he owes still on his mortgage. He's going to pay that off in 3.5 years and only pay $16,000 in interest, because we do all the calculations. I know how much interest you're going to pay. I know how much interest you're going to save. I know when you're going to be, I know the month, day, and year you're going to be debt free by plugging that information in. By putting the additional income in, now he's all the way down to paying everything off in 3.5 years. He was so excited. And when he told me this, he was less excited when I told him, you know, you're paying off the mortgage too fast and you're not paying enough interest over here. He says, Don, I thought that was the idea. Pay less interest, get out of debt faster. Yeah, but that's a little too fast. Let's break this down for a minute. Because we have the calculator and we can do the math easily. I said, take $2,000 a month out of your income. Tell the program you're making $2,000 a month less. Let it recalculate. Now let's look at the numbers. So when he did that, we looked at the numbers and now it says he's going to be out of debt in 6.5 years instead of 3.5. Now he's going to pay $20,000 in interest instead of $16,000 in interest. He says, Don, how is that better? How is that better for me? I said, now let's look at the reverse of that. Okay. If you like the idea of paying $16,000 instead of 20, if you like the idea of getting out of debt in 3.5 instead of 6.5, then you have to put that $2,000 a month back into your program and put it towards debt reduction. That's 36 months. That's 3 years, 36 months, plus another 6 months. That's the half a year, 3.5 years. That's 42 months times $2,000 a month. Folks, that's $84,000 all day. So I asked him, do you want to put $84,000 towards debt reduction? And then only saves you $4,000 in interest, going from 20,000 to 16,000. He says, well, when you put it that way, no. And I said, why do you want to pay off the house so fast anyway? He says, because we want to build our dream home. I said, well, if you want to build your dream home, build it now. Build it now. He says, well, we've been putting so much money towards getting out of debt. We haven't saved the money for the down payment. I said, yes, you have. He says, well, what do you mean? I said, it's in the walls of this house. Go out and get yourself a HELOC, because you got great credit now and you have a ton of equity. Go out and get yourself a HELOC, a home equity line of credit. Then get your down payment for your house, which is a $700,000 house. And this was almost 2 years ago now, almost 2 years ago. And start building that house. Do you know that's exactly what he did? He got a HELOC on his house I sent him down to one of my friends downtown who's a VP at a bank downtown. In about 2 weeks, everything was done. I mean, the money was in his bank account. Okay. And then he used some of that money to put the down payment on the new house. And this was before COVID really took hold. Okay. And so he got a great deal at that time. And during the as COVID started to take hold, there became delays, and then there were supply chain issues and all this kind of thing. The house is finally done now. The house is finally done, and I think they just moved in. But guess what? The house next door to this $700,000 house just sold not too long ago for over $900,000. His equity has increased over $200,000 while he was waiting. Folks, if he had waited to pay off this house in 3.5 years, he would be
the people, Don.
He'd be paying $1 million for a $700,000 house. And listen, folks, I'm not ashamed to say I am 5'4". He's over 6 foot tall. The last time he saw me in a restaurant, do you know this man came over to me and picked me up and twirled me around like a rag doll? And he said he was so grateful for that information. So grateful for that information that he now paid $700,000 for a $900,000 house, getting ready to go into $1 million. Okay. And and he put a renter in the other house. He's going to have both paid off in about 10 years using this system because of all the interest he will not pay. Come on now. Come on. All right. Miss Dawn, I see that you're back. We need to hear from you. Who are you and what do you do? And then we're going to go to Miss Coffee Brown. Miss Dawn, can you speak to us?
Yes, thank you so much, Don. This is Dawn Digital, and I am a leadership consultant who owns a digital marketing agency to help creators, nonprofits, and professional institutes really increase their digital footprint online to make more money while they sleep. And it's a pleasure to be here with you.
Thank you so much, Miss Dawn. Miss Coffee Brown is in the house. Miss Coffee, tell us who you are and what you do.
Reverend Pastor Dr. Don. Good morning.
Oh my goodness. You always giving me promotions.
Listen here. We got to keep you elevated, sir. Got to keep you up. Good morning, everybody. My name is Coach P. Coffee Brown. I'm here in the great state of Texas by way of Houston. And I was just listening to you, Don. You were talking about the insurance world, and that's what I do by day. I manage a team of incredible leaders in the insurance industry. When it comes to all lines of business, and we were just having a meeting about life insurance on yesterday and teaching and educating people on permanent policies and the need for them. Just kind of, you guys can check my bio to find out more about what I do and how I do it and how you can participate in it. But just to piggyback off of that, I shared with somebody the other day, I did a in-person event here in Houston, an educational event. And as we were there, I shared with them, I said, hey, let me tell you about the power of a permanent policy with mutual funds attached to it. I was sharing with them about when the pandemic ensued, we had a challenge with our work environment and everybody ended up not getting compensated. Well, guess what? The life insurance compensated my family and took care of all of our needs, and we did not miss a beat because we had that policy in place. Had we not had that policy in place, we might have been in trouble. But nonetheless, that is what we use as a savings account. It bears incredible interest, and it's been a huge blessing to our family at a very minimal fee. So minimal investment, let me rephrase that. It's not a fee, it's an investment at a minimal investment. And so it's so important that people understand that, and they're very, very clear. Don, I wish I knew what I knew now, what I should have known earlier. I would have had permanent policies long before on my tiny humans that are now young adults. But education is the key. It is not just empowering, it is life transformative. So definitely, guys, make sure you're spreading the wealth with this room and sharing with others about this incredible opportunity to learn more information on how you can get out of debt at an accelerated rate and go ahead and have that money positioned to invest not only in yourself but in your future. So I yield the mic back to you for now, Don. Thank you so much for affording me the opportunity to be here.
Listen, you're not done yet, because and Denzel bring up some very good points that people need to understand. Okay, so you're saying during the economic upheaval, the stock market is going crazy. Okay, dropped by like a ton, and people who have their money in these other have their life savings in these vehicles lost a lot of money. Are you trying to tell me that during that time your policies where you're investing lost no money?
I didn't lose not one red cent. Not one red cent. Listen, and you know what, too? A lot of people sleep on bonds. We get so obsessed with stocks. A lot of people sleep on bonds, but that's not my expertise. I am not securities licensed, although I'm securities educated. So I don't want to say too much, but I definitely have a professional that is securities licensed for the entire nation that I can definitely get him to come in here with us one day when his time permits, Don, and have some chats about that, some generic chats, of course, to educate some people on that. Yeah, but I didn't lose a dime. And even in my other vehicles that I have stocks and bonds in for my daughter, I let that money sit there. That people get, let me tell you something. Fear is the ultimate killer of investors. Fear is the ultimate killer of investors. The money is going to move, but what goes down has to come up. It's called a pendulum. It will have to swing up. So I'm giving it back to you, Don. You got me excited.
Well, listen. I get that. We're talking to our clients, and they're telling us, because we talk to them every now and then. We have our clients who are using the pill method. We're figuring out what is that sweet spot for them to put money into debt reduction, and then when it stops making sense, let's take that money and put it into wealth creation. Our folks who are putting into wealth creation, into permanent life insurance, they're making 14, 18% on their money. I mean, if they're using an IUL, if they're using permanent, let's say whole life, a little bit less. But my goodness, to make that kind of money on your money, and then no risk of it ever being lost, even in a down economy, you don't lose money. And you're
Don, think about the inflation that we're experiencing with these housing markets. People that have properties already, their investment is going through the roof right now. It's going through the roof. And so you can shift that money as well into different investment vehicles. But Don, you got me excited. I'm going on mute.
Wait a minute. Coffee, Dawn, Credit Goddess, Denzel. Listen, are you saying that because things are going up so fast that we should not sit on that equity? We can take that equity out of these houses that have been going up exponentially and invest that money too?
Listen here. Put that money in a different investment vehicle, honey. Get you some education in here.
But coffee. This is exactly what we're talking about. Denzel, this is what we're talking about. If we take that money out, we're going to pay interest on that money. If we take that money out of our properties, if we take that equity out, we're going to pay interest on that money. And folks, I need you to listen to me dearly on this. Yes, you will pay interest on that money. But think of it this way. I buy a bushel of apples for $10. I sell the bushel of apples for $20. How much did I pay for the apples? Anybody?
Not one penny. Not one penny.
Nothing. I didn't pay anything for the apples. If I borrow money,
you got 100%. God, Don, let me go on mute. I'm getting excited.
Listen, folks, if I take money out of the equity and then I invest it in something safe and I make more money than it cost me to use their money, that's called arbitrage. That's called leverage. I am taking an asset and I'm making more money with it. It costs you nothing.
Come on, Don.
Oh my goodness. If we could just, listen, folks, you know why more people don't do this? I'm going to tell you why. You need to write this down. All right, everybody, write it down and you can clip it if you want to. The fear of loss is greater than the desire for gain. One more time. The fear of loss is greater than the desire for gain. And we have that fear mainly because we're not educated on how to level up and make money with our money. Money should be making money. Credit Goddess, what do you call that? Are you still in the building when money makes money?
It makes money, babies.
Your money should be making money, babies. Come on, folks. We have opportunities here. We have a new person up on the stage, and we've got some people. Sir, I'm going to get to you, but we have a question. We have a question on from Sonia online here, and she wants to know. Here's what she wants to know. Thank you for this content. Does this work for homes priced at 500 to 600K being paid off in 6 to 9 years? Let me go through this right quick. All right, Sonia. And not only does it work for homes like that, it works for commercial buildings. And I'm going to give you an example of this. We're going to put this on the screen right now. Okay. And then we're going to talk about the book and other things. All right. So let's go ahead and put this on the screen. I have this client who right now has $2 million in properties. $2 million in properties. $2,236,376, and the bank wants them to pay it off in 21 years. All right. Can we put that on? Can we go ahead and show that on the screen, please? All right. So let me go ahead and there we go. Add that. All right. So there we go. All right. So we've got $2,236,376 of indebtedness. The bank wants them to pay $1,123,000 in interest. Okay. So, but I want you to take a look at what the bank is trying to do to him. All right. In 2 months on this loan, he's paid it down by $7,374.92. The bank wants him to pay $4,609 in interest to do that. On another building, in 37 months at 5% interest, he paid it down by $99,000. Now, why didn't he worry about this? Because his tenants are paying. The mortgage. Okay. So $99,795.91, but it cost him $222,000 in interest. If you're new to the room and you want to see this example, please go to ICE10kvideos.com. That's ICE. It stands for Interest Cancellation Expert. 10K, the number 10 and the letter K.com. And you can see this example. Please go to use your tablet or your computer, and you can see this. And if you're already in the room, we're at 15 shares. Can we get it to 20? Can we get it to 20 shares? Because now we have 36 people in here. So if we got more, so if we can just get more people in, that would be great so that they can learn too. Can we get it to 20? Can we get it to 20 shares? Here's what we're talking about, folks. All right. So this is how much interest he spent already. Okay. He spent a total of $226,000 in interest on his buildings just to get $107,000 worth of equity. It cost him $226,000 in interest to get $100,000 in equity. I'm going to show him how to pay out $243,000 instead. Pay it off not in 21.9 years and give the bank over $1 million in interest. He's only going to pay out $243,000, and he can be done in 4.9 years. 4.9. So if you owe a lot, it doesn't matter. What matters is how much interest you will not pay. And if you take a look at his effective interest rate, now we're taking a look at an effective interest rate, meaning if you're only going to pay a small amount of interest, what would your interest rate have to be if you were going to keep this loan for the full 21 years, full 22 years? If you're going to keep these loans for full 22 years and pay this little amount of interest, what would your interest rate have to be? Less than 1%. Less than 1%. That is your effective interest rate. So, folks, here is the real question. If you can borrow money at less than 1%, then why are you taking your cash? Why would you ever pay cash for a building? Why would you ever pay cash for a house? Why would you ever pay cash for a car when you can borrow it for so much less than you can take your money and put it in an investment and make a whole lot of money? Oh my goodness. That's what we're talking about, ladies and gentlemen. And if we could just understand some of these basics that we're talking about today, why credit card interest is better than mortgage interest, I'm going to get into those numbers in just a little bit. But I've got a question on the stage. We've got the lead mechanic on YouTube here with us this morning. Sir, how are you doing this morning? And what can we do for you? Mr. Lead Mechanic, can you come on off mic? Hit that microphone in the lower right-hand corner, and then we can get your question or comment. All right. Well, when you come back, flash your mic. All right. We'll leave you up there for just a little bit, maybe because you're busy. You got somebody came into your shop or whatever. That's okay. So listen, folks, we're going to I need a few more shares. We're at 15 shares. All right. And let me see what is going on in the comments. What's going on in the comments? All right. And Denzel had to jump. That's good. All right. So he's going to stay and support us anyhow. But folks, here's what we're talking about. We are letting people know that if you understand interest cost versus interest rate, you can make very good decisions. And Miss Sonia, I hope this answers your question about if there are homes priced at $500,000 to $600,000, can they be paid off in an average of 6 to 9 years? The answer is definitely yes. All right. So we have let's see, Credit Goddess, you were flashing your mic a lot over there. Do you have something to add to this conversation?
No, I don't have anything to add.
Oh my goodness. This is some good stuff. So I'm waiting for the lead mechanic. Sir, please, whenever you're ready, flash your mic, let us know, and just jump right in there with your question. Coffee, are you still in the building? Okay, she may be at work as well already. So, folks, I'm going to go back into our example. I'm going to go back into our examples here and put this back on the screen. We're going to put our amortization schedule back on the screen. Here it is. And I'm also going to put on another thing. We're going to put on $15,000. This is a credit card balance, $15,000 at 20% interest. 20% interest. I want to show you why. Now you're going to be able to see why credit card interest is better than mortgage interest. I'm going to prove it to you right here. We have a $15,000 balance at 20%. People say, oh my gosh, 20% interest. And all of the experts say you need to get rid of this because it's hurting you. When we do the math, I want to show you your interest payment on this. Your interest payment on this is $250. $250. And somebody might say, Don, if you could pay that off, you need to pay off that credit card that's cost that as at 20% interest. And they're saying that without actually knowing how much interest is actually costing me that month. If I pay off the 15 grand right now, all it would save me is $250 in interest. That's it. Because that was going to be my interest charge for the month. $250 at 20% interest. Oh, listen, well, Don, I don't have 20% interest. I have 27% interest. Let's duplicate this tab. Let's take a look at what 27% would do. 27, nearly 30% interest on this thing, folks. Now we're looking at this thing. Oh my goodness. Oh, now it's at $337.50. At 27%. If I paid off that 15 grand today, now I need some comments in the, listen, I need some comments. I need some folks in to share the room out. We had 16 shares, and this information is golden, folks. Please get it out there so people can see. And if you're new to the room, please go to ice10kvideos.com, ice10kvideos.com, so that you can see this example. All right. So here's what we're talking about. I've got a $15,000 credit, a limit, balance on my credit card, $15,000. And this month, the bank wants to charge me $337.50 in interest on that this month. If I pay it all off in 1 month, I save $337.50. But even on this $200,000 loan at 6% interest, here's what the experts are saying on national news. I heard this just last Tuesday, listening to the news. Your credit card interest is 2, 3, 4, 6 times. We got 6% mortgage here. We got a credit card of 27%. That's nearly 5 times. Your credit card interest in this case is nearly 5 times what your mortgage interest is. And because of that, they're scaring the people, saying that because your credit card interest rate is 5 times your mortgage interest rate, you need to pay off the cards immediately. I'm not saying that you shouldn't pay off the cards. I'm saying you should do it in a way, a structured way, that ends up saving you more interest, because it's the long-term interest that's damaging, not how much you owe. It is the interest cost that's damaging, not the interest rate. Take a look at this, folks. Take a look at this. If I put $15,000 down, if I pay off $15,000 on this mortgage, instead of putting $15,000 on my credit card to save $337, look at what $15,000 would do to this mortgage. I knock off almost 5.5 years off this $200,000 mortgage. And this is a $200,000 mortgage, not the $500,000, not the $600,000. This is a $200,000 mortgage. I would knock off 65 months. That's 5 years and 5 months of payments I would never have to make, and saves me $61,000 in interest. Oh my goodness. Folks, do you hear what I just said? Are there any reactions to that? Oh, if you like this information, put a number 1 in the chat. If you like this information, if that was a nugget to you, that $15,000 at 27% on my credit card paid off would save me about $300 in interest. Oh, $337. But if I take the same money and put it on this mortgage at 6%, it's going to save me, knock off 5.5 years off my mortgage, and save me over $60,000 in interest. Folks, who's talking about that? Who's talking about? Are the financial gurus talking about that? Is the guy in Nashville, Tennessee talking about that? All right. Is anybody else saying that here are the numbers behind why we're giving out this advice? No, they're not talking about that. They're using fear and they're using emotion to get you to focus where you shouldn't be focused on the interest rate instead of the interest cost. Oh, 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 oh. And folks, if you want to know more about this, if you want to know more about what we're doing here and why we're doing it, getting the information out, if you have a mortgage, if you have student loans, if you have credit cards, if you have car loans, if you have all of that, some people have all of that going on and they're wanting to know, what can we do about it? Okay, here's what you could do about it. Okay, there is, look at my 10K card at the top of at the top here. Okay, all right, it is that's ice10k.com. If you click on that, you will see to get a savings and earnings report. Get a savings and earnings report. And when you get the savings and earnings report, all right, here's what you have to do. You will fill in your financial information on all of your loans. If you put all of that in there, all right, put everything in on your savings and earnings report. Okay, we're going to put that on our screen online as well. All right. So what's going to happen is this. We're going to tell you the month, day, and year you're going to be debt free. The month, day, and year you will be debt free, and how much interest you're going to save, and how much of the bank's money is actually going to pay for this lifetime program. Because remember, if you buy a bushel of apples for $10 and you sell that bushel of apple for $20, you didn't pay anything for the apples. If we can save you an average of $150,000 in interest, and you pay a small percentage of that interest for the program, that's money that you would have given to the bank, but you use some of that to pay for this lifetime program. It didn't cost you anything. You're saving way more money than you're ever paying. Besides, it's the interest you would have given the bank anyhow. Oh, wow, wow, wow. Plus, it's a lifetime program. So I've got people who are paying off their fourth mortgage on this program since they got it. And they only paid for it once. Ooh-wee. It's a gift that just keeps on giving, folks. A gift that keeps on giving. And if you want to know, here's what you need to understand when you're doing this. When you're clicking on confirming your cell phone number, because you got to put your phone number in there so we can confirm that it's a real person. We're sending you a code as a text message. Click it once, only once. Wait for the code. Get the code from your text messages and put the code back into the website. When you put that code into the website, it then will let you into the form, fill out that form, and someone from my staff will give you a call and set up your consultation. Do it today. And also get the book. Get my book today as well. All right. It is called The P.I.L.L Method, A Better Way to Eliminate Debt. You'll find it on Amazon. You'll get it at the same card, ice10k.com. You can click on that button that says get the book. It takes you straight there. It's the only book out of 33 million titles that gives you an introduction to this information and why you need a computer system to help you to understand all of this. It gives you the basic understanding. Everybody needs a basic understanding of their finances so that they can take this information and take it to the next level, and then the next level, and then the next level. This gives you a great foundation and understanding for the first time in your life that the banks since 1934 have been charging us more interest than we need to pay, 75% more interest than we need to pay. So get the information that's going to give you the background, the foundation to build on. This is the most powerful debt elimination system ever created. And we shared this information with one of our celebrities, and we have a celebrity endorsement from Mr. E.T., the hip hop preacher, Eric Thomas, and we're going to play that for you right now. My name is Don Daniel, founder of Pill Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the Pill Method. I invite you to watch and listen.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down from my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today. Ladies and gentlemen, you're in the Pill Method Club right now. Go up to the top of the page, hit that green little house up there, and join the club. Get this information. I mean, this is hot information that is not being taught anywhere on the internet, not taught anywhere else on this app, not taught anywhere else. You only get it at the Pill Method Club. And you can please follow your moderators, follow me, and click on that little bell icon and that says always. So whenever I'm in whatever room, we're going to be giving good information out about how to save money on this interest that is killing us. Folks, we're spending our children's inheritance on interest, and we don't have to. We can acquire assets for so much less. And I got James on the stage. All right, James, how are you this morning?
Blessed and highly favored, sir.
All right, great. Do you have a question? Do you have a question or comment for us today?
Well, I have a comment. I come in here and it was like getting kicked in the teeth because over COVID, I literally went 52,000 in the hole on credit cards, and I've been working diligently to pay those off. And I've only got 6,000 left. And I'm going, should I have put that money, that $46,000 towards my mortgage now that I'm listening? So yeah, it just jumped up to be like, wow, this is some really powerful information. So thank you. And we'll see where it goes from here.
Okay, James, thank you for that. But here's what we're doing. There's a time and a strategy in when to put money on debt and on credit cards or car loans or on the mortgage. You want to put the right amount of money in the right month, on the right day of the month, on the right loan to maximize your interest savings. So, will the credit cards pay off before the house? The answer is yes. But should we pay off the credit cards and exclude the house until the credit cards are paid off? The answer is no. We want to there's a time to put money on the mortgage. There's a time to put money on the credit cards. Let's do this in a way that we can optimize our interest savings, because the interest cost on the credit cards is so much lower than the interest cost on the house. James, did that become apparent to you, sir?
It did.
All right. So thank you so very much for your comment. Miss Dawn, are you still in the building?
I sure am, Mr. Daniel.
Listen, tell us what can you give us your opinion on this that you're getting from our room, or maybe something you got from a client of yours or personal experience. What do you say about this information?
Well, from personal experience, Don, I wish I knew just as what James said, to do that because I focused on getting rid of credit card debt. I really have very little credit card debt, almost negligible. But seeing the importance of focusing on building your investment portfolio at a certain age, understanding that you will eventually pay down your credit card debt is really, really, really important, Don. And I was thinking, okay, I'm a property owner. We've had this conversation before. How can I maximize, using this formula you have to even consider property development, which is the next stage I'm at, Don?
Oh my goodness. First of all, that's a very good question. First of all, this when it comes to credit cards, okay, they need to be used responsibly. Okay, so here's what I mean by that. People who have resources should use credit cards. If you don't have resources, be very careful. This is not something that you use when you don't have money. That is not the purpose of it. Credit cards are for convenience. Okay. So if we use them to keep us afloat, you could put yourself in a bind. I understand that during times of difficulty, if we have that money available and we're doing it for a reason, there are some businesses out there right now to get through COVID, they had to borrow money, but they were borrowing money to keep a business alive that makes money. They were putting it into an asset that generates income in better times. If that is your goal, that may be a worthy goal. Okay, but here's what I'm saying: if you're borrowing money just to buy stuff because you don't have the money now, that is a serious problem. If you're borrowing money to acquire a money making asset, now that is a totally different story, Miss Dawn. So that's what she wants to talk about. How can I best use the bank's money to buy an asset that's going to turn into making money for me for the rest of my life?
That's correct, Don. So getting equity on the property that I have, acreage, to get an asset that would not just pay for that equity that I took out, but also pay for the asset that I invested in.
Exactly. So here's where we need to focus in on. If you are an investor in property, you may never, ever be out of debt. And there's not a doggone thing wrong with it. And here's why. If we can put ourselves in a position to cash out refi, I mean, get that, we can get equity much faster, much cheaper if we understand interest cancellation. 5 to 10 years sooner, we can have the equity built up at a much lower interest cost, take that money out of the property called a cash out refi, and then invest that money in other properties, and you grow your portfolio. Listen to this: you grow your portfolio, your investment properties. You grow them using money that you're no longer paying the bank in interest. How powerful is that idea, Miss Dawn?
That is powerful, Don, because my property is all paid for. I do not owe a penny on it. So you're telling me I could take out an equity loan on that property and go invest in another property. It's going to be a buyer's market. They tell me soon, wait until, the prices come down and go invest in one of those properties that I've been eyeing. Is that what you're telling me, Don?
Actually, I'm saying you should invest. And here's what I believe. Okay. I believe buy real estate and wait. I don't believe in waiting to buy real estate. You can find a deal anywhere. You can find a deal anywhere. Can I give you an example of that since you talked about it, Miss Dawn?
Go right ahead.
All right. So let's just say we have, I'm putting in a mortgage right now. Okay. And it's an investment property. Okay. $300,000. Okay. And the interest rate is, ooh, my goodness, it's 6.25. 6.25. All right. It's a multifamily property. Okay. Here's my payment on that. Okay. $300,000. Okay. At 6.25 is $1,847.15. Okay. It's a multifamily property, so I'm getting rents in. It could definitely pay for that. But I heard an investor the other day saying because of the times that we're in and because how he was leveraged, he wasn't paying 6%. He was paying a whopping 18%. 18% interest. That means that the payment was $4,500 a month. But if he is renting this out for $7,000 a month, what should he be looking at, Miss Dawn? How much the mortgage is and how much he's getting in rents? Or should he be looking at that 18% interest rate and get scared off?
How much his return is on his investment, the interest.
Okay. So if he is making this kind of money, is this a good investment, even if he's paying 18% interest?
Absolutely.
Absolutely, folks. So find a good deal. If it pencils out that you're making money, then it's a good deal. Don't let higher interest rates upset you. Well, now watch this. Watch this. We're going to get into this right now. And I need you to see something that if you didn't know how to read an amortization schedule would be awfully scary. All right. Now, remember, he's making about, what did I say, $7,000 on this, and it's costing about $4,500. Okay. So that's $2,500, about $2,500 a month that he's making on this property. $2,500 a month on this. And I need you to take a look at 18% interest, how much money is going to principal and how much is going to interest. Miss Dawn, I don't know if you can see this or not. I don't know if you're watching us online. Are you?
No, I'm sorry. I'm sort of multitasking.
That's okay. Let me tell you what's going on here. At 18% interest, only $21.26 goes to principal. $4,500 goes to interest. But because of how he penciled it out, it's still making him $2,500 a month. But only $21.26 goes to principal, $4,500 goes to interest. Now, if you've been paying attention in this room, can somebody come to the stage who is not a moderator and tell me how we're going to turn this into a benefit where you're only paying $20 towards principal and $4,500 in interest? Can somebody come to the stage and say how this can be turned around? And you don't have to refinance it. Can anybody come up that's been to the room before that would love to kind of explain this? And I'll help you. I guarantee you I'll help you. If I can just get somebody else to say it besides me. Raise your hand. Come to the stage. I'm going to tell it if nobody else does. But I would love for somebody else to explain why this is a benefit to only pay $21 towards principal and over $4,000 going to interest. Can anybody else explain this to me? Oh, come on.
Oh.
Hey there he is. He's back. Mr. Lead Mechanic. How you doing, sir?
Excellent. If you pay that $21 ahead of time, then the interest itself goes away.
What? Oh, it can't be that easy. Wait a minute. So I make this payment in the first month, right? I make the first month's payment where $21.26 goes to principal, $4,500 goes to interest. All right. And I paid the mortgage out of the rents that I'm receiving, right? I have $2,500 left over. And you're saying out of my $2,500 that I just made, if I take $21.58 of that and prepay it, it's going to save me $4,499.68 in interest. Is that what you're trying to tell me, sir?
That is correct. The interest based on the principal. Even the principal is no interest.
Remember, folks, if you're new to this room, here's what you need to know. Interest costs you skip don't matter. It doesn't matter what the bank is looking for. What matters is what you actually pay. Miss Credit Goddess, listen, I hope you're not talking to another client right now and can talk to us. Credit Goddess, are you in the room? Oh, man, because
I am.
Oh, is this exciting to you where you can be a real estate investor in this deal that's making $2,500 a month, but only $21 is going towards principal? What you could do to this loan on top of making $2,500 a month? Wow.
Yep.
Listen, folks, I need you to take a look at cumulative principal if you could see it. After 1 year, we would pay this loan down by $277.25. Miss Dawn, are you seeing this? No, you can't see it, but are you hearing it?
I am hearing it.
In 1 year, if we follow what the bank is asking us to do, we would only pay this loan down by $277.25. And we might be lulled to sleep in that. Why? Because we're in a real estate deal that's making us $2,500 a month because of the rents we're receiving. But if I do it the bank's way, I will only pay this loan down by $277.25 and pay the bank $53,977.87 in interest. That is legal. To pay almost $54,000 out just to pay the loan down by $277.25. And I'm lulled to sleep because I'm making money on the deal. So here's my question. If in a year I would pay this loan down by $277.25, Mr. Lead Mechanic, do I have to pay that $277 over a 12-month period? Mr. Lead Mechanic, are you still there? Come off mic there. Come off mute. Do I have to pay that $277 over 12 months? He's busy again. All right. Listen, folks. If you were to pay this $277 at one time on line 1, you'd be paid all the way down to line 12 in just 1 month. You would save $49,000 in interest. You would skip all the interest payments between line 2 and line 12 just for an extra $277.25 that you could take out of the rent money you just received and your profit for the month of $2,500. Can you imagine that? This is what we're talking about. This is what people don't know, folks. This is why I'm saying that credit card interest is way better than mortgage interest because of the cost that you pay. All right, Mr. Lead Mechanic, are you back?
Yeah, I'm back. I was a little busy. Sorry
Okay.
for that. Yeah, so when you putting that money on the principal,
Yeah.
in certain situations, do you have to let them know, hey, this is principal payment, or do you just pay and it automatically goes to principal paying ahead of time?
It depends. If you have an escrow account, meaning your taxes and insurance is part of your payment, then you have to let them know in the way that your bank wants to be notified. And some is just as easy as going online, and then there is a section on the website where it says, when you type money in here, this will apply to principal. It says apply to principal only. Okay, so they make it that easy. Some banks, but some of them you have to call them and find out, how can I make a prepayment to this loan, and you will apply that money to principal in the month that I give it to you. They will tell you their rules. Follow their rules. The same rules do not apply across all banks. Don't get fooled on that. Okay, because I had a client pay an additional $40,000 on her mortgage, and what she did was she put it in the memo of the check, apply to principal only. Then she wrote out a note that said apply to principal only. She wrapped up the check in the note and sent it in. The bank promptly threw away the note and ignored the instruction on the check and put that money in her escrow account. Why? Because she didn't follow their rules. Now she got it switched over. It took 2 or 3 phone calls. All right. And it took some time out of her day, but she got that money applied to principal. But why? When all she had to do was follow the bank's rules and say, this is how this bank wants to be notified of a prepayment. And she could have found that out with a phone call and saved herself some time. But folks, that's what we're talking about. So if you're not escrowing, there's only one place that extra payment can go. It can only go to principal. It can only go to principal. It can't go anywhere else, because you can't pay mortgages ahead of time. You can't get ahead on a mortgage. All right. So extra money goes to principal. That's just it. All right. If you want to make sure, always call the banking institution to make sure what you're doing is going to be accepted by them. And I advise this to all my clients. Make sure you know the rules. Never, ever assume you know the rules to a particular bank. Find out, and they'll tell you. All right. Does that answer your question, sir?
Yes, sir.
Do you have any additional questions? All right, folks, we're getting close. We're getting close to the end of the day, and I want to thank you for coming into the room. We're going to be back here on Sunday, and what we're going to be talking about on Sunday is going to be equally exciting. Now, we talked about saving money. We talked about cutting interest costs, but generally, when we save this kind of money, we don't really know what to do. I want to shine a light on focusing on saving money and what to do with it. I want to shine a light on that, okay? And how we can take this money, we're no longer paying an interest, and how we can level up. We're going to talk about what we can do and the kind of money that this thing can earn by interest not being paid to the bank, how we can cut our interest costs by 75%, and what we could do to build up our generational wealth using that money. Oh my goodness, this what a good time we're going to have. Listen, I want to make sure that we recognize all the moderators before we get off. But before we do that, I need you guys to go to the top of the screen here. Go to the top of the screen and click on click on my 10K card, ice10k.com. That's ice, the number 10, the letter K.com. And if you want to know the month, day, and year you could be debt free, the month, day, and year you can be debt free, and how much interest you can save, and how we can turn that interest savings into wealth creation. Wow. Go there now and click on get a savings and earnings report. Get a savings and earnings report. Do like thousands and thousands of people have done, not only in this country, but internationally. Okay. We have people in several other countries that are our clients. All right. And they're saving money all over the world. So if you're in London, you could be a Pill Method client. If you're in South America, you could be a Pill Method client. If you are in Sudan, you could be a Pill Method client. If you're in South Africa, you could be a Pill Method client. If you're in the Bahamas, you could be a Pill Method client. If you're in Bermuda, where they have 7% interest and the median home price is over $1 million, you could be a Pill Method client. And you don't need more money to get out of debt. You just need to pay less interest. And 7% seems like a lot, but I'm going to show you how to make the best out of a 7% if you are in Bermuda. If you're in Jamaica, you could be a Pill Method client. They're paying 9% in Jamaica or more. In Jamaica, again, doesn't matter how much interest they want, it's how much interest they will actually receive that matters. All right, folks. So we have clients all over the globe. You want to make sure. If you're listen, one place I want to go to is Australia. Before we leave this earth, my wife and I want to go to Australia. So let's make a plan to go there. Meet me there. But I have clients in Australia. Okay, all over the world. This thing called the internet. This thing called the internet is awesome to get our message out. And the person that is chiefly responsible for getting our message out on the internet is Kurt Nugent. And sometimes he's able to come on here and talk with us a little bit. I don't know if he can today, but if he can, he'll jump in. Let me know if you can, Kurt, by jumping in and let me know that you can speak to the folks today who may want to take their business from a local business and make it worldwide. The Pill Method started out just in this country, and then we went international because of the internet. And I think I hear Kurt Nugent getting ready to come in here. Kurt, what do you got to say, man?
Hey, man, I just wanted to jump on real quick. I'm pulling double duty, as you know, always trying to maximize my time. But yeah, I'm always excited whenever you talk about the power of the internet, the power of these platforms to be able to showcase what it is you have to offer the world. And it's what we call discoverability, Don. You're using Clubhouse and YouTube as your primary means of discoverability and allowing people to find you, allowing those algorithms on those platforms to push your content towards people who are interested in exactly what you're looking for. And you're leveraging all of the things in such the right way. But one of the things I always share with folks, I can help you with the tech. I can help you with the media. I can help you with the studio. You see how Don looks. Somebody even commented earlier, they like how his studio looks. I love that. But here's the truth. All of that stuff would not matter if Don did not have quality, life-altering content to share with people. And that's the intangible. I can make anybody look good, but you have to be saying something. The looking good part only stops the scroll. That stops the scroll. And now for that, split second, 10 seconds, whatever it might be, whatever their attention span is, where they've stopped and they've listened, you've got to grab their attention by saying something that is going to change their lives, something that they have been asking the questions on and have not been able to get the answer. And this is why I love working with Don, because Don has answers. Don has answers, and he has formulated his answers in the form of critical questions that he's answering. And those questions that he answers allows the algorithm to take his content and put it in the hands of those who are looking for those answers. When you go to search on YouTube or Google, you do not search in the form of an answer. You search in the form of a question. Everybody does this. And so you want to formulate your content in the form of a question. That's just one little free nugget that I'll give out. I want to make sure you guys are able to tap in with me, Kirk10klive.com. That's my digital business card. Would love to be able to chat with you guys. Go ahead and book 15 minutes. We'll look at what it is you have to offer the world, what it is your superpower it is, whatever if you're an author, coach, consultant, doesn't matter. You want to take what it is you do and put it out there on a broader scale, like what Don is doing. If you want to stop being the best kept secret, because the only reason why your friends tell you that is because they want you to keep your prices the same. They know you're undercharging for the value you have to offer. That's why they say, man, you're the best kept secret. It's not a compliment, fam. Put your stuff out there where everyone can find it. And go ahead and grab 15 minutes on my calendar. Would love to be able to meet with you, see if we're a good match, see if what you have to offer is ready. It's ready for the world to be able to consume. Again, Don, thank you so much for the opportunity to be able to come on and share a little bit as we get ready to close it out.
Certainly, folks, before we close it out here, I want to show you something, the value of being on the internet, okay? And not only that, but being on the internet the right way. I'm going to put this back on the screen. Let's share this screen right now. I'm going to do a Google search. I'm going to search P.I.L.L method. I want to show you something here. I'm searching P.I.L.L method right now, and look what happens. Look what pops up when you search the P.I.L.L method, okay? And in fact, I'm going to even change the word. I'm going to change the search to the P.I.L.L method and do it. Now, when you think about the P.I.L.L method, most people who don't know my business would think of something else. They would think of birth control. But when you put in the P.I.L.L method, this is on Google. Look what pops up. Okay. My book on Amazon, my book in this bookstore, my book in this bookstore. Okay. Somebody said that they just came back from Bermuda and saw my book in a bookstore in Bermuda. I didn't even know they were carrying my book there. All right. So listen, so we keep scrolling down here, folks. It says P.I.L.L method, P.I.L.L method, P.I.L.L method home. Okay. P.I.L.L method money rules. That's on my website. About us on my website again. P.I.L.L method summary on my website again. My business profile. Okay. On Google My Business. All right. And P.I.L.L method, a better way to eliminate debt, paperback on Amazon again, and videos. See, I'm scrolling down. It's still only talking about my business, and it says you can view all again. And P.I.L.L method best in business award. That's an award that we won. My book in Books a Million. Yeah, the P.I.L.L method book is in Books a Million. Okay. And listen, so this is a magazine article, and then we go to page 2. So all of page one is P.I.L.L method. Did you realize if you keep scrolling now to get to about birth control is actually on page 2, somewhere down the road. Okay, Goodreads, thrift books. Up, we finally get there. One of the last thing on page 2. We're getting ready to bump birth control off of page 2 onto page 3. This is the power of the internet, folks. This is what we're talking about. And my content being up there and folks constantly searching that content when they see us online. All right. When they see us on the internet, on my videos, that once we finish this show, do you know this content is going to be up forever? It's going to be up forever. I want you to realize what you could do with the right content in the right way, put up there. So whenever anybody's thinking about debt reduction, they think about the P.I.L.L method. When they're thinking about wealth creation, I want them to think about the P.I.L.L method. And so the more we put out there, more content we put out there, our SEO, search engine optimization, just keeps going through the roof, mainly because we have evergreen content. All right, folks, I want to thank you for being here today. We've got some great moderators on the stage. Moderators, if you can do an outro today, would you please flash your mic if you are available for an outro? All right, I'm looking for it. Moderators, if you're available, flash your mic for an outro. Oh man, Miss Coffee Brown. All right, Miss Coffee, talk to us today. Tell us who you are and how we can get a hold of you and what you're doing.
Don, thanks a whole million. I am in the office, insurance office, but I did want to do a quick outro. First of all, thank you for this exciting room and this awesome opportunity to add value. I am a publisher, 8-time international best-selling, to be more specific, been on the charts for 15 weeks with one of our publications and hit it a couple times. But of course, that doesn't compare to Don's incredible book. My book is more geared towards relationships and family, which of course is important. Nonetheless, fast forward, we have just relaunched our official boutique. It's called DFG Private Boutique. It's right on Facebook. Head over there, like and follow the page. What we're doing to add value to people is, as you're coming in, we'll give you the details as to how you can do this. But we're offering $100 in freebies at the end of every month for class participation, but you got to be in the class to participate. So connect with us, holler at us, come on over to DFG Private Boutique right on Facebook so you can have a chance to win some incredible accessories at affordable pricing, high quality, and absolutely stunning. And also connect with me at coffee10k.com. Back to you, Don.
All right. Miss Dawn, please do a quick outro.
Yes. If you would like to connect with me, there are a couple of ways. You can go to meetdawnkirk.com. That is my 10K card URL. You click on that and you'll be able to connect with me, join my leadership newsletter and look at some of the offers. Or you can connect with me right here on Clubhouse in the Let's Talk Leadership with MMTI room. I am also a leader in the Genuine Connections Club and the Black Owned Business Hub. So, I'll be happy to reach out to you. I offer digital marketing services, SEO, Google My Business, reputation management, all that good stuff. I'll be able to help you to develop a blueprint to move faster and more efficient as a business owner online. Thank you for having me, Don.
You're so welcome. So welcome. Credit Goddess, are you available for a quick outro? All right. So, folks, you need to follow Credit Goddess. You need to follow Dawn. You need to follow Coffee, and make sure that you read their bios, get their information. If something there that resonates with you, please tap in with them. My name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. And for the last 16 years, we've been helping individuals cut their interest costs by up to 75% and therefore paying off all of their debt in 7 to 9 years. We have a book by the same name, The P.I.L.L Method, a better way to eliminate debt, that's been a 5-time bestseller on Amazon. And it is something that you need to get today. Go to Amazon and get the book, or go to my 10K card and get the book. Also, go to my same 10K card, ice10k.com, and get a savings and earnings report so that you can pay off so you can know the month, day, and year you could be debt free and how much interest you can save, just like E.T., the hip hop preacher, who's going to have our last word just before I tell you. We're going to be right back here on Friday talking about another subject that you're just going to love. We're going to teach you how to take that money you're saving and turn it into generational wealth. See you on Wednesday. All right, E.T., talk to him. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L Method. I invite you to watch and listen.
Listen to me, y'all. One of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, We didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today.